All right, what is going on, Discord and YouTube family? And welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is October the 5th, Sunday, 2025, year of our Lord. And as per usual, we'll be breaking down the S&P 500 E-mini futures, NASDAQ, as well as the Dow Jones. First and foremost, hope you guys had a blessed weekend or had a great week of trading as well. I certainly did. The Discord members had a great week. Hopefully, we can continue this on and just continue to grow as a Discord and try to get more members into the Discord. That being said, the link to the description link to the Discord is in the description down below. If you're interested in learning how I trade, how I view price, you're more than welcome to join the Discord. Prices are simply $40 a month for now. Prices will go up in January, but I'm trying to advertise as much as possible during these analyses. So when I start to raise prices and then you start to see what I've actually been up to, I don't want to hear that you didn't get the opportunity to get in at a cheaper price because I'm giving it to you right now. That being said, we'll start with the monthly time frame. We talked about last week the market basically finishing out the month and the 3-month candle bullish. And we'll start over here with the S&P 500 to discuss that. We talked about the 3-month candle finishing at the same time the monthly candle was finishing. I said it was like a 0% chance the 3-month was going to finish bearish, right? And it didn't, right? So now the question is what now, right? We got government shutdown. We got all of this information that's out there that's negative, and everybody's basically kind of capitulating that, you know what, maybe it's time to sell the market. I just disagree, right? Until the 3-month, the monthly, or at least the monthly, maybe not the 3-month, but until the monthly candle starts to show some sign of bearish activity, I'm going to continue to look to long the market. Now, whatever thumbnail you may see from me, that may be just clickbait to get you to click on the video, maybe pouring into the current narrative, which is the government shutdown. That doesn't matter. Forget the thumbnail, forget the picture. Listen to the words and the information that is coming out of my mouth and understand that I am completely on the side of the bulls until the market objectively tells me that it's time to switch sides. That being said, looking at the monthly candle coming in green, we pulled back into roughly about 20% of the previous candle. And again, this is bullish, right? So what is the market supposed to do after that? It's supposed to make a new high at 67.57. Did it do that? Yeah, it went even higher. It went right to the target, year-end target for, some analysts at Goldman Sachs, Bank of America. These guys don't know what the hell they're doing. But they are good at predicting where price is going to be by the end of the year. Their prediction was 6,800. Just because we hit 6,800 now doesn't mean we can't go past it and then close down there at 6,800. So that level was important. We hit it right on the nose and then fell back down just a little bit. But ultimately, the nod goes to the bulls on the monthly time frame. We go over here to the weekly time frame. And again, I talked about this doji candle last week, previous week, and go back and watch the videos, right? And you can see that I said, hey, this is a basing candle. What do we want to see out of this basing candle? Is sometimes we see that it's a doji candle at the top of trend, which then turns around and is the top of the trend, i.e. an evening star pattern. But other times when we're in a bullish uptrend, which I think this qualifies, right? When we're in a bullish uptrend, what we'll get is this doji candle will print. This will basically be a demand setup on the weekly time frame. Where we get a rally candle, a basing candle, and then the next candle rallies above the previous candle, indicating formation of demand here, right? So as long as we stay above that basing candle, objectively speaking, above 66.26, the market will continue to be bullish on the weekly time frame as well. But what did we do that next week? We got above that level and we stayed above the 26s, and then we got above the 55s, and then went all the way to 6,800. So what am I anticipating for the next week? Well, nothing's going to change in my thesis. Sorry. Since April, my thesis has been the same, right? Nothing's going to change in my thesis because as long as the low of 82.50 holds, right, 81, then I'm anticipating higher prices above 6,800. Does that mean we can't get a pullback to start the week? No, of course we'll get a pullback because the market cannot go, well, doesn't usually go bullish unless your name is gold. It doesn't usually go bullish without trading down first, right? So am I looking for the daily candle to start to trade down going into next week? Yes, and I'm gonna tell you why. We're moving into the daily candle now. as we look at the daily candle, we're up in this uptrend. And then we get this huge rejection candle here. We get this rejection candle every time we break an all-time high. We got it here, right? We got it back here, right? We got it back here. Every time we go higher, we get a rejection candle, trap bears, and then the market just slays people, right? But what does this mean? Usually what this means is as long as we stay below the 67.81 or Thursday's high, right? Then we should get some level of retracement targeting back down to either this wick or, like I said, if we're going to change the character, 66.23. I'm not opposed to the market going bearish. It's just not showing signs of going bearish yet. That's it. So on the daily candle, even though we do have a rejection type candle, it did not accomplish anything. By getting below 67.41, I would have been a little bit more convinced that, hey, this is a break of structure. Maybe we come back and fight, but we didn't do that. Instead, this is still a higher high and a higher low. So let's drop down to the 4-hour time frame, and I'll discuss kind of what my thoughts are moving forward for the week. I'll give you out my weekly projections, and then we'll move on to the next instrument. Moving over to the 4-hour time frame, we can see that the chessboard high, again, if you want to know what the chessboard is, just tap the link. It's 40 bucks, man. If you don't like what you see, you wasted 40 bucks of your life, and then you can just go on about your business. Then you can just talk stuff about me in the comments, right? That'd be dope. But anyway, we have our chessboard, 6,800 through roughly about 67.54. We have our previous day high at 6,800, our 50% or our equilibrium at 67.77, and our previous day low at 67.54. We have additional levels below us as support, fair value gap, and demand zone. And then above us, we have our weekly average true range or our weekly ATR. Our weekly projection is based on price trading down to come up. 2.14% plus or minus is what we're looking for. If we trade down, then I'm looking for the market to tap into this 90-minute fair value gap. It's not that I don't think the 1-hour support is going to hold, but it's that I don't think the 1-hour support is going to hold. The reason why is because I believe that the market will trade below discount, right? Indicating that we're officially below weekly fib and monthly settlement, tapping into the 90-minute fair value gap to go higher. Looking at 2.14% from 66.2875, which is the top of this 90-minute fair value gap. And we'd be looking to target 68.73 back to the upside. If we trade down and we can't get to this 90-minute fair value gap, then the level that I anticipate holding is right at discount. There's the weekly fib there at 67.40, and then monthly settlement right beneath it. This monthly settlement is special because it's also where the monthly candle settled, and where the 3-month candle settled. So this level should be fairly important in regards to price action. So the next level I would like to see the market trade down into is that weekly fib area at 67.40, go up 2.13% into 68.8375. Okay. Now, if we want to be bears, which I would love to be a bear, but in order for me to officially be bearish, the market has to show some level of continuation. What I'm anticipating out of the market is bearish activity to start the week. I'm anticipating this continuation to continue, or this bearish activity to continue either to the intermediate of the range, the middle of the range, or all the way back down to the low of the range, and potentially all the way back down to here before heading back up. So that being said, that's what my analysis reflects. So we want to see the market trade up to come down. If we trade up, then what I'm looking for is the inefficiency here. This is on the 1 hour inside of our chessboard. We're looking at 67.9325 trading up and then coming down 2.12% into 66.4950, or back to the point of origin right here from September 25th. If we trade up and come down and we can't close that inefficiency, which is going to tell me that the market's going to close it later, we gap down and then we push back up to the daily fib at 67.77. From there, I'm looking for, again, 2.12% all the way back down to 66.33. And again, if we come down here, then it's in danger of us dropping straight through this liquidity low and then tapping into this demand zone before heading back up. Now, in order for this to officially be bearish, the market needs to clear this low here, right? Oh, let me go back over here. The market needs to clear this low and then get below here and then start to break below the monthly fib. If it starts to do that, then I'll start looking at the market differently. But for now, I'm just going to continue to play the uptrend until the uptrend breaks. That being said, those are my levels for the S&P 500. Let's move over to the NASDAQ. All right. All right, switching over to the NASDAQ and looking at the NASDAQ on the monthly time frame, then we're looking at the same activity. We zoom out to the 3-month and we see aggressive bullish candles, which means that the 3-month is probably going to take us up to like 28,000 low key. Like I'm not even joking. Just do yourself a favor, go to the 3-month candle and measure the size of these candles. Do like the last 5 candles. That would be a total of what, a year and a half, give or take. And then divide that by 5. And then tell me what you come up with, right? And then you'll get a good idea where price is trying to go. And then you won't look at this level as like, man, we're up too high, right? So if we go higher, the market's gonna have a target, right? So dropping back down to the monthly time frame, we just ask ourselves, is this bullish or bearish? That's all we were asking right now. Everything has been bullish. There's no reason to believe that this is going to be anything but that until the market objectively says that's what's going to be. We go down to the weekly time frame. We got that same setup, the weekly rally, base, and potential rally candle here. Well, not potential, it started to rally. The next question is, will we get that continuation before we get a break of structure? Going down to the daily time frame, again, this is where it starts to look bearish, right? Because up here at the daily, we continuously get at the close of these Fridays, we continuously get, after running these highs, a quick sell-off. Now notice how the NASDAQ did exactly what I would like ES to do. ES gave a rejection candle without breaking the low. NASDAQ gave us a rejection candle at the highs and then broke the low. And if you were trading on Friday, you knew that there was a huge divergence in price in that ES went up higher while NASDAQ started to push down toward the lows. And this was the final result. We still tapped into this demand area down here, but I'm anticipating us pushing down even lower on the NASDAQ for a pullback or finally a change of character. If we change character, this will be the start of a nice, powerful downtrend. The catalysts are there, the fuel is there, the fear is there. The only question is, can we finish, right? And we'll go through reasons why I believe that that also could be true. But again, I'm not going to change my bullish thesis until the market tells me to do so. Let's drop down to the 4-hour and I'll further illustrate exactly what I'm looking for out of the market with my top-down analysis. Moving over here to the NASDAQ and looking at the top-down analysis, we can see just basic levels. We have previous day high at 25,196, daily fib at 25,060, previous day low at 24,923. A little bit of support down beneath us. And then, of course, we have our chessboard here in the center. If we're looking for price to go trade to the upside, then I want to see the market trade down to come up. If we're going to trade down to come up, the first level is this 1-hour fair value gap. And then the secondary level is this 3-hour demand zone. We trade down into 24,691, which would be the 3-hour demand zone all the way down here, right inside of this yellow box, because that's the optimal trade entry. I learned a new word over the weekend, right? We're looking at 24,691, targeting up 2.84% into 25,392. Okay. If we don't go down that far and we just use the 1-hour fair value gap as support, I'm looking for price to go down into 24,851, or basically the middle of this area, and then target up 2.82% into 25,551.50, right? If we're going to be bearish, then again, we want to see the market trade up. If you go down to the 1-hour, you'll see that there's an inefficiency here inside of our chessboard. So we'd be looking for the market to trade up inside of the chessboard and go down 2.79% into 24,407, which supports our thesis of the market sweeping this particular low after breaking this particular high, and then starting a new range that we can either trade up from or start to continue to the downside. That level sits at 24,407 to the target, and then the daily fib would be the secondary level that we can't get back above the equilibrium, and then we target 2.79% down to 24,361. Again, very, very clean, very cut and dry on the NASDAQ and the ES. Let's move over to the Dow Jones. All right, moving over to the Dow Jones, again, taking a look at how we finish monthly, 3-month. I like to focus on these levels because they will be important in the future. It doesn't mean we can't fail. This is just the beginning, right? All I'm saying is the way that we're starting, if the market decides continuation, we're building a strong base to continue to go higher, right? The monthly candle gets the nods to the bulls. The weekly candle, I think it's pretty obvious who gets the nod. And again, failure at these highs was very significant, but you can't really see it until we start to go down to the daily and the 4-hour. Why is that? I do not know why the market drove up on the Dow Jones from 46,787 to 47,311. Dow Jones traveled 600 points and gave back half of it at the close. Literally gave back 300 points at the close. So that to me is very, very bad. Like that's telling me that buyers came up here and sellers stepped in, and they stepped in a major way, right? So I got to take that into consideration, because this could just be a drop and then boom, the next candle could come and sweep all of this liquidity. Do I know what's going to happen? No. Do I have an educated guess? Absolutely. And that's what I'm going to do. If then statements. That's how I trade the market. We look at this 4-hour candle before we bring out our top-down analysis level, and we can see a huge rejection on the 4-hour, a retest that failed, and still no break of this 46.82. So if we're any continuation to the downside to the continue, I'm looking for this 46979 or 981. I'm looking for the low of this candle at 983 to basically break. That's what I'm looking for. If not, it's back to the upside with everything to the upside. So now let's look at our top-down analysis. Let's take a look at the levels that we have moving forward. And then we'll move over to the volatility index, and I'll show you my thoughts on that instrument as well. Now, we have our basic levels. 47,323 is our previous day high. 47,043 is our daily fib. 46,762 is our previous day low. All of that, and we have our chessboard that sits above the daily fib. Again, all of these sellers, all of these buyers up here are now trapped, right? So again, the thesis here is that we go lower to continue to put them in pain. But that doesn't mean we can't go back up later, right? So now what are we looking for? If we go lower, then I'm looking for price to trade up to come down into the top of the chessboard at 47,236, going down 1.90% into 46,345. If we can't make it that level higher, then we gap down and then we hold above or below the daily fib, targeting again 1.91% into 46,145. At some point, there's going to be a huge gap down and some type of bad news catalyst that's going to cap this market down. Do I know when, or is that around a corner? I don't know, but it's going to happen at some point, and it's going to trap a whole lot of people that have been long and swinging trades throughout the weekend. So that's why I'm not interested as an investor. On the investor side, I'm not interested in buying the market up here. I'm just not, right? Anyway, moving on to the upside. If we want to be bulls, we want to see the market trade down into structure and then go back up. We trade down the nearest structure, the weekly fib at 46,829. Then we'd be looking for the market to go up, targeting 1.91% at 47,722. If we trade down lower to go up, then I'm looking for the market to break below the weekly fib and continue traveling down to the 4-hour demand at 46,498. And then we trade up to about 1.9% into 47,394. And there's a huge gap between my projections. So what I've done here is I've drawn a fib that we will look at for as resistance levels in the event that the market trades up into them as such. All right, so those are my levels for the Dow Jones. Let's move over to the volatility index, because I want to give you some thought processes to further illustrate, what I'm thinking about and how I'm thinking price could be delivered. All right, so we go over here to the volatility index. What do we see? Again, I've been saying it for weeks, and I'm going to continue to say it. The VIX is moving sideways in discount. Somebody is loading buy positions down here. Because if they weren't, we'd already be coming down, right? If the market was really wanting to sell off on any instrument, it's not just going to consolidate at the lows. If it's trying to reaccumulate price, yeah, we're going to consolidate at the lows for a very long time. And then we're going to manipulate either to the downside or to the upside, but most likely to the downside. Because once that manipulation happens, again, I've had this bad news here for since August 11th is when I put it, right? Since we tapped into it the first time, I said, we sweep this low one more time and we close this gap, or sweep this low, that's when I'm looking for the VIX to go crazy to the upside. And right now, it appears to me that on the weekly time frame, what we're getting is that the VIX is absorbing all of the sell side liquidity up at this trend line. So once it absorbs it all, it's going to manipulate down, sweep the lows, or tap into the 50%. And then the next time it comes up, it should be getting aggressive. But the problem with that thesis is that we don't know how long that could take. The VIX could do this for months, right? Quarters at a time, right? And then you'll get a gap up because when the contract rolls over, they always gap the VIX up and then they'll come right back to this level. So I don't know when that's going to happen, but I know whenever it does happen, it's going to be very, very bearish. So I'm just keeping an eye on the VIX, watching it every single week and seeing exactly what it has going on. Now, last but not least, we'll go over the news on the day, but I got a little information for you when it comes to the news on the day. So let's go to the news for the week. And again, the big thing that you need to know is this yellow line, this yellow sign right here, where it says U.S. government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation. More so, they're all just getting canceled. So we were supposed to get unemployment claims last week. We didn't get it. We were supposed to get NFP. We didn't get it. For those of you traders that say, well, the market only moves when there's news and you don't trade this day because there's no news, please leave in the description down or leave in the comments down below. What do you do when there's no news for however long this shutdown lasts, right? Because the market doesn't just move on fundamentals. It is a part of it. Fundamentals, in my opinion, start the motion of price because people need a reason to buy and sell in any market, right? However, if there is no news, Walmart will still get purchases, right? People will still walk into the grocery store and buy shit, even if there's no news on the newest bird flu, right? The market will continue no matter what. Volume will continue, right? So the idea that you can't trade no news days is being disproven the longer we stay inside of this government shutdown, but that's neither here nor there. But what I will say is algorithmically speaking, the market will still continue to trade as if that same news is going on. That's something that I've noticed because NFP day, although we didn't get the quote unquote NFP news, we still had the same price action statistically that we usually look for out of NFP. A trade up or a trade in any direction in the morning usually gets reversed completely by the close of the day. That's just, you can look that up, you can back test it. Most of the time, that's exactly how NFP trades. And we didn't even have NFP, but it did that exact same thing. Anyway, I rambled. Going into the next week, what do we have? Literally nothing on the schedule for Monday, right? What else is new? We're going into Tuesday. Also, nothing on the schedule, just a ton of FOMC speakers, right? There's really no reason to even pay attention to USD news, in my opinion, but it is what it is. We go into Wednesday. We get the FOMC meeting minutes. I don't know if they're going to release this. I have no idea how that's going to work. If the government shut down, do they still get FOMC minutes? I don't know, but we should get the minutes there, but there's really nothing to see there because we already know the Fed's going to cut rates. That's all it really matters. It's going to cut rates until the end of the year for sure, right? This is where it gets suspect because you see this little sign right here where it says tentative. That just means on the day and time, they're going to cut it off and they're not going to post it. If the government's shut down, they're not going to post anything that has to do with the Bureau of Labor and Statistics unless they vote to change that. But for now, they're not going to do anything. But what could be important is this guy, right? Federal Jerome Chair Powell is scheduled to speak before the market opens, right? During the unemployment claims. Will he say anything about unemployment claims? I don't know. But I know that Thursday should be volatile just by him coming in, very nature of him coming into the market, right? So, and then Friday, again, if the market is still shutting down, anything that says tentative, you best believe you ain't going to get the information, right? So ultimately, we're supposed to get average hourly rate earnings, non-farm employment change, unemployment rate. We're not going to get any of that, right? It doesn't say tentative. So I'm hoping that the prelim University of Michigan consumer sentiment, that does not come from the Bureau of Labor and Statistics, right? So I'm hoping that we'll still get this news on Friday, and that could give us a heads up into what the unemployment claims are expected to be based off their projections. So I think the news is going to be very important this week, not the actual news, but the fact that we're actually not getting news and then seeing how the market continues to react to that, whether it be in a negative fashion or a positive fashion. Okay. That being said, ladies and gentlemen, that is all I have on the top-down analysis. I really hope this is helpful to you. If you're in the Discord, feel free to DM me and ask me about the levels. Need me to shoot them to you, I got you. That being said, my name is T Hobbs. This is the top-down analysis, and I will catch you guys on the next one, man. Peace.